Hi guys, we're back. Ray Cousins here, partnered with Light Forex Broker, giving you our top level market analytics every week. My top favorite trading opportunity. This week, I'm going to show you what I think about the S&P 500. We are actually at a very critical moment right now, and the technical picture, I have to say, is very strong, but it's also pretty grim. So let's go ahead and take a look. Alright guys, so this is the bigger picture. This is the weekly chart, S&P 500. And it's easy to see that all across 2016 and 2017, there was a strong upside trend, right? But I think what most people tend to overlook is the fact that at the very beginning of 2018, there was a critical moment here, where price shifted from a trend into what we call a consolidation phase. So basically it was trending for a few good years up until January 2018 when it formed this peak here, right? At this point, price had shifted into sideways movement, right? Into a trading range. Obviously I didn't know that back then, but now I'm pretty confident that that's the situation. So price had started with a strong downside move. That was the first leg. And and then of course it went up to the following move, which was the second leg. With that move, it actually broke the previous high. It took the previous high and then began to turn around. So only when it began to turn around, especially with that drop we had here in the last couple of weeks, I started to believe that what we're looking at here is actually a trading range starting to form, just a typical consolidation phase. And I was able to apply the symmetric setup, right? I only needed two legs. I always need this V shape to begin analyzing a potential sideways movement, right? So I had to have these two legs in place, which I did, but then I also need to have a reverse at the edge of the second leg. So when that happened, after price took the previous high, that's actually pretty important, because when price takes the previous high, it is more likely to reverse. It's easier for it to reverse. So when it did, I immediately applied the symmetric setup. Take a look. This is this black system here, right? But what's most important is to acknowledge this particular key level. Take a look, 27.95, that's the mid-high key level. It's a natural symmetrics level, right? And it was my main point of reference. When I saw price begin to drop, I started to suspect we may be looking at a potential trading range, which means we may be looking at the next downside leg that should reach the lower section again, right? And possibly even take the previous low. And these are the implications, but I had to make sure that I was right on the assessment, right? And in order to, be right on the assessment, in order to gain the necessary confidence, I needed to make sure that price is able to break below 27.95, right? That's a huge support level. But I wanted to make sure it can do that on the weekly note, with the weekly close, because the weekly close is a very important moment. A weekly close represents the balance of power between buyers and sellers, right? Basically, they come to an agreement just on Friday, right? The last hours, the last minutes of the trading week, both buyers and sellers come to an agreement. You can see it like this. This is like the equilibrium of price. And the fact that price, take a look, let me close in a little bit. This is where I find it to be really interesting. This is where it becomes really promising on the downside. Because first we had a close of below that 27.95. Take a look at the close here, pretty decisively below, right? 27.06. So when I saw that, this is where I immediately, raised the flag. Raised the flag of a bearish conviction. I actually started to build up my bearish conviction. I established a small short position. It was small because usually I take extra cautious on the way down. You know, down moves, especially in the equity market, are very elusive and risky. So I tried to be extra cautious on the way down. So I started to establish a small position. I wanted to have more supportive elements that support my conviction. And you know, I didn't have to wait for too long. Because take a look what happened the following month. The following week, which was just last week. It started, right, just after price closed below that 27.95. It started strongly on the upside. And it actually crossed back above the 27.95 for a couple of days. But as the week progressed and got closer to its end, price went back and closed below that level, leaving this spike here. Take a look. And you know, this is a very strong moment. This is, you can actually consider this moment as a reconfirmation, right? We had a weekly close, just a week before, we had a weekly close below that 27.95, which was my official trigger level. But then we had a reconfirmation when price was challenging that same very level from below, but you can see how it ended, right? It completely failed. Let's take a look how it looked like from the daily perspective. So from the daily perspective, you know, I saw that strong upside move. It was a one-day move. And I saw that it actually closed above 27.85, but I just kept reminding myself that this is just a daily chart. Daily chart is usually noisy. So I thought this actually might be just an excess noise, not a genuine breakout, but a false breakout. So I needed to wait to the end of the week to see where price is going to close the week, because that's what's really important. So I just waited a couple more days and I saw the weekly close below 27.85, and of course then the touchdown from below, which just enhanced my bearish conviction. Now let me tell you about the potential here on the downside, because you know, the symmetric setup here is very straightforward. What it suggests here is that price should continue on the downside to reach the same very level it came from. Simply put, the lower section. The minimum level here would have to be 26.12, which is, in fact, my official price target. I do believe that price has lots of potential to drill lower than that, taking the previous lows also around 2,500. But as I've said, on the way down, I take extra cautious, right? So I'm always trying to focus on the safest spot possible. And here, the safest spot possible would have to be the 26.12 level, key level. This is the mid-low key level, right? So I'm going to try to chase price all the way there, and once price hits that level, hopefully I'm going to close out my short position and look for opportunities somewhere else. But right now, forget about the fact that I have a short position on the S&P 500, and we can actually take advantage of what seems to be going on. But there's also some implications with regards to, well, the equity market as a whole, right? Very grim picture. I mean, this pretty much suggests that the markets are going to continue to be in a turmoil, right? And this should also affect the financial markets as a whole, right? The equity market, Wall Street has a huge influence over the financial markets, so that's pretty much the implications. But like I said, we can definitely take advantage of it and capitalize on it if we can read the technical situation correctly. So yeah, there you go. I'm becoming very much bearish right now on the equity market as a whole, S&P 500 specifically. And yeah, I'll follow up. I'll keep you posted. Probably a few weeks later on. I just hope you enjoyed that session. I sure did. Don't forget to subscribe to our channel, open an account, join in, because it's going to be epic, right? All right, guys, have a great trading day. See you in the next one. Bye-bye.